This video will address you all your concerns related to the levy of composition scheme under GST. Video will also explain the process of registration and calculation of taxes under this scheme. Under GST law, composition levy scheme is an alternative method of levy of tax designed for small taxpayers whose annual aggregate turnover, that is ATO, is up to Rs 75 lakhs in 8 specified states or Rs 1.5 crores in other states for goods and ATO of Rs 50 lakhs for services. The composition levy scheme aims to bring simplicity, ease the compliance burden for the small taxpayers. Under this scheme, a registered taxpayer has to pay a small percentage of his ATO as tax on a quarterly basis. Such a taxpayer does not have to maintain elaborate records and has to file a simple annual return in Form GSTR04. To determine your eligibility for registration under composition levy scheme, you need to calculate your annual aggregate turnover. Turnover of all businesses with the same PAN has to be added up to calculate turnover for the purpose of composition scheme. It is the sum of value of all outward supplies falling in the following 4 categories: taxable supplies, exempt supplies, exports of goods or services, interstate supplies, but excludes the value of inward supplies on which tax is payable by a person on reverse charge basis and taxes including cess paid under GST law. The value of exempt supply of services provided by way of extending deposits, loans or advances insofar as the consideration is represented by way of interest or discount. Registration under GST law is compulsory for opting for this scheme. A new GST registration applicant may opt for the scheme by providing necessary information under Part B of Form GST Reg 01. Any registered person who wants to opt for composition levy has to file GST CMP 02 with the government. This can be done online by logging into the GST portal. This information should be given before the beginning of the financial year. The information once filled for the scheme would remain valid as long as the taxpayer is eligible for the composition scheme under GST. A composition taxpayer is required to pay tax at a specific rate on total sales. For an eligible manufacturer of turnover, tax at rate 1%, 0.5% CGST and 0.5% SGST or UTGST of ATO is payable. For an eligible service provider of turnover, tax at rate 6%, 3% CGST and 3% SGST or UTGST of ATO is payable. An eligible person engaged in marketing supplies mentioned in Clause B of Para 6 of Schedule 2 of the CGST Act, like a provider of restaurant service, tax at rate 5%, 2.5% CGST and 2.5% SGST or UTGST of ATO is payable. All other eligible suppliers, that is traders, tax at rate 1%, 0.5% CGST and 0.5% SGST or UTGST of ATO is payable. Tax liability under the composition scheme need to pay on quarterly basis via form or challan PMT 06. There are certain conditions which have to be adhered by a person opting for the composition scheme. A taxable person opting for the scheme has to issue a bill of supply as he is not eligible to issue taxable invoice under GST. He has to mention the words composition taxable person not eligible to collect tax on supplies at the top of every bill of supply issued by him. Such taxable person is not eligible to claim input tax credit of purchases. He needs to mention the words composition taxable person on every notice board or signboard displayed at the prominent places at his every place of businesses. A person whose aggregate turnover exceeds the eligibility limit, or in case he wrongly opts this scheme, has to opt out of this composite levy scheme by filling an intimation for withdrawal from the scheme in the form GST CMP 04 within 7 days from the days on which the threshold limit has been crossed. After opting out of the scheme, he has to pay tax as normal taxpayer, issue tax invoice for every taxable supply made, and eligible for input tax credit thereafter.